Hey techies, buckle up for today's deep dive into why Apple made headlines. It's a roller coaster ride, and yup, we're talking big dips, uncertain twists, and potential gains. Apple shares took a bit of a nosedive today, falling by 2.8% to 228.34 cents. What's the reason behind this market shakeup? It all starts with the geopolitical chess game that is the China-Taiwan standoff. Former President Trump's recent comments have amplified concerns that this situation could escalate, which could spell disaster for companies with supply chains tightly wound across these regions. Now, if you're wondering, why should Apple care? It's all about the chips. Apple really depends on Taiwan Semiconductor Manufacturing Co. for the chips that power everything from your iPhone to your MacBook. Any hint of instability or trade restrictions could mean delayed production, increased costs, and a bottleneck in Apple's well-oiled machine. Adding fuel to the fire, Trump's recent critique focuses on U.S. companies outsourcing manufacturing to Taiwan. If the political winds shift towards pressuring these companies to bring manufacturing back to the U.S., Apple might face some hefty bills. Just think, higher labor and operational costs stateside compared to Taiwan's setup. This could lead to sky-high production costs, potentially impacting pricing strategies and profit margins. Good luck explaining those newly inflated iPhone prices to consumers. But hey, this isn't just about worrying and hand-wringing. This situation opens up opportunities for investors. With Apple shares already up 17.5% year-to-date, there's plenty of buzz on whether to hold the line or ring the register, cashing out while you can. Swing traders might see this as an opportune moment to make quick gains by selling high-performing stocks. Long-term investors, on the other hand, could be eyeing this dip as a sweet spot to buy more Apple shares at a discount, betting on the tech giant's future performance. Who doesn't love a good discount, right? But how does all this stack up with Apple's arch-nemesis, Microsoft? Both titans have had an impressive year, with stock prices bubbling up about 20% in 2024. While Microsoft has the edge in earnings growth predictions and overall return over the decade, Apple has a clear upper hand in shorter-term gains over the last 5 years and even 3 months. While considering whether to dive into Apple or Microsoft stocks, bear in mind that Apple's price-earnings ratio suggests it's relatively cheaper compared to Microsoft. However, remember that higher anticipated growth for Microsoft could make it a juicier bite for future returns. In conclusion, today's Apple news is a cautionary tale of how geopolitical issues can influence market movements and potentially create both risk and opportunity. Whether you're a day trader ready to move fast or a long-term investor with eyes on the horizon, Apple's share movements are worth a watch. So, what do you think? Is Apple stock about to take a bite out of your wallet, or are you sharpening your fangs for some discounted delights? Drop your thoughts in the comments below. Let's get the conversation going and see where everyone stands. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.